You are listening to ChartingWealth.com for Monday, the 15th of February, 2016. We always start with IYY. The market is a confirmed down move. We have three good down candles starting around the 4th of February. The candles start on the 8th, the 10th, and the 12th. We have big red down candles. Now, if you were listening, of course, the market itself, the total market as represented by IYY, was up 1.6% on Friday. One day does not mean a total change in the market. Typically, it does not on our MACD, our moving average convergence divergence. What we see happening is we do see the blue MACD coming together with the signal line, but it's not yet crossed. We have a long wick on the bottom of the 2-day candle, meaning that the market was pushed down a lot lower than it ended up. If we go and we look at our intraday chart, what do we see on the 4-hour chart? A lot of movement up in the morning, a lot of movement up in the afternoon. Actually, the market went just about as high as it started going down on just the morning of February the 11th. So, yes, there was an up move in the market. The MACD has not crossed over going up yet. The derivative oscillator flipped over from red to green. Does it mean the market's going to keep going? The answer is we don't know. Possibly it is. Now, of course, what we had been talking about prior to all of this was taking some profits with the huge down moves that had occurred. Hopefully you have done that. You did that in your virtual account, and you maybe took half or so of your profits. Perhaps you didn't. Perhaps you're letting it ride. You're counting on the big chart to keep moving down, although we saw the big chart starting back on the 25th of January move up and then roll back over. Again, that is a total judgment call for you based upon your experience and how much profit you are comfortable with making, which is always a determining factor. Now, again, some profit's always better than no profit is always better than a loss. We have a great deal of upside potential in the market when we look at the Bollinger Bands and how far they extend upward on the MACD. They go a lot farther up than they do down. Those are the volatility bands. Now, if we switch from our 2-day chart on IYY, the total market, and drill down a little further into the S&P 500, we see it too has three big strong down candles, although the MACD is coming together even more so on that big chart, which is something to look at, and the derivative oscillator is in the positive. The S&P 500, as represented by SPY, was up 2.06% on Friday. That is a lot of upward move. Now, if we drill down into that and go to our intraday, our 4-hour chart, again, we see that the market, all it did was really recapture the down move in just the morning of the 11th of February. It has not yet crossed over. It may do so, but it hasn't yet. We don't have a triggered crossover, and we're still below the 2-day trend line. Hopefully, like we urged, you took some profits back around the 11th or so and made some money and felt good about that. You may be letting the rest of it ride. Again, that's up to you. Still below the 2-day trend line. Don't have a crossover yet. Could cross over Monday morning. Could cross over Tuesday. Just need to continue to watch. This is where you set your own parameters and you operate by those. Let me do a quick aside here, and I think I'm going to record something on this after the program today, and that is on stop loss orders. I have had some of you write me and say, Tom, when we're making good money like we did this last week in our virtual trades, and again, a quick aside, we are not a stock calling service. We're an education firm. We talk about you learning to trade virtually. You make your own decisions with real money. We don't make any decisions for you at all. But getting back to the question about stop loss orders, do we put stop loss orders in? No, I don't believe in them. What I believe in is you monitoring the market a few times a day, at least in the morning and the afternoon, and then what's even better is to actually put in email alerts. so that when the market moves on your security or your index that you might be like the S&P 500, you're sent an email or a text alert, and then you're able to go in, look at what's going on in the market, and make your own decision. Here's the problem with a stop. If you put a stop loss order in, what happens when that stop is triggered? You then have a market order. If the market is crashing, or if it happens in the morning when the market maker's in charge for that first hour or so of the market, you can be sold out at a total loss. You don't have any control with a market order. You get whatever the market maker's saying the market is at the time, as opposed to you getting an email alert, going in, checking out your account, seeing if it's just a blurb and you're going to let it ride, or if it is a time to get it out, and then you can put in a limit order, which limits what you sell your commodity, your stock, your index at. It lets you limit it. Never put anything, I don't, except a limit order, never a market order. Never, ever, never, ever, ever. That's not the way I do things. I just don't. Why? Because when you put in a market order, the price is set by the market maker. It's not a limit order where you limit what it is you're going to pay. The most you're going to sell it for, the least you're going to sell it for, the most you're going to buy it for. That's the only way that we do it. Just a little aside there. So, we have not yet crossed over going up on the MACD on the 4-hour chart, so we don't yet have a trigger. We're also below the 2-day trend line, but getting close. Now, let's range back out to the 2-day chart and take a quick look-see at the Qs. What is the Qs? Well, that is the Nasdaq 100. We've got a green up candle there on our chart, but we still got some distance between the MACD and the signal line, and we're still in the negative on the derivative oscillator. So if we revert back and look at what's going on in our 4-hour chart, and for the record, the Qs was up 1.52% for the day. We're getting close to that 2-day trend line and have already crossed over in the morning on the 4-hour chart. So we've already crossed over. Now, hopefully, with all that big, strong down movement, we talked about this for several days, how the Qs was continuing to bang on a bottom, which it's bounced off of now. Again, that bottom is still nowhere near where the market started plunging down on the 8th. It's not popped off and risen that high yet, but it is getting awfully close to the 2-day trend line and has already crossed your MACD. So be very cognizant of that. Hopefully you already took some of your profit. And again, this is just the short chart, okay? It doesn't make a large chart. The large chart is still down. We've not yet crossed over. We do have a green candle, and typically a full-in green candle on the Hinki-Ayashi kind of chart that we used doesn't make for the big open boxes that we typically see in a run-up. The last full green candle we saw on our 2-day chart was way back on the 1st of October, but it did signify a bottom at that point, and there was a huge run-up after that. So again, just pay attention. Now, lastly, we're going to go to our gold. What's going on with gold? Well, gold is still in a confirmed up move, big up move on the big chart, starting back on the 16th of December. It's continued to move, well, it slid sideways for a while and then moved up, and particularly for the last, 5? Well, actually more than that, but 5 in a row candles, lots of big, strong up move on the 2-day chart. Now, if we drop back on the 4-hour chart and see what's going on with gold, we're going to see something a little different. Gold on the 11th hit a high outside the Bollinger Band in the morning and then inside the Bollinger Band in the afternoon, and then slid sideways on Friday the 12th. What do we have going on? Well, we don't have a crossover yet on the 2-day chart going down. We do see the derivative oscillators lost a lot of its speed, but that doesn't mean that gold has rolled over at all. Hopefully, as we've talked about, those of you who jumped into gold, either when the 4-hour chart rotated back over on the 21st, or even beforehand when it rotated over back in, December on the 2-day chart, Hopefully, you have made a great deal of money and have been selling some of your position. You can do that. You can sell parts of your position, a quarter of it, a half of it, and then let some more ride to see if you can get anything else out of it. But remember, always our trick is to not lose money first and to make money second. And then when we make money, not to lose the money we made. And again, people will kick themselves over and over. Oh, I made 4%. I made 5%. I made 20%. But I could have made 10%. I could have made 30%. I coulda, woulda, shoulda. Those don't count. What counts is what you did do. And when you make a profit, be thankful and happy with that. And again, don't get out too early, but don't be foolish and stay in too long. And when you do stay in too long and you lose, don't say, I'll let it all go away or I'll earn it all back. Because typically when you lose the momentum, when it rolls over, it's probably not going to go back in the direction you hope it is. You're just going to stay in for the long haul and get hammered. So please be careful. Don't let that happen to yourself. That is where we are as the markets ended the day on Friday. As we come into the new week, after this program, I'm going to record the weekly review and forecast. I hope you'll be sticking around to listen to that. We'll also be emailing that out. If you're not already signed up for our daily podcast, our daily review of the markets, please do so at our website, chartingwealth.com. And also as another bonus, you will get our weekly review and forecast once a week. In addition to that, you've got a How to Read a Stock Chart video. You get the link to that. That's for all of our subscribers. And also, you will get our layout that we use at freestockcharts.com. And again, our layout, just like all the other things that we are providing here, are free. So sign up, get that information. We're happy to share it with you. We love to hear from you. We love your questions, concerns, problems. In fact, what I addressed today on stop loss orders, I actually addressed that from a question sent by a viewer. So we love to hear from you. Thanks so much from chartingwealth.com.